Good morning, everyone. Welcome to the London class. I am Marcus Dee, aka Deeyana Angelo. If you're here for the first time, I have been trading for 18 years and I usually trade weird instruments, right? So I trade things like platinum, copper, gasoline futures, but I've traded crude oil and gold for all of 13 years since I've gone into the futures markets. Prior to that, I was a swing trader in Forex for 5 years, and that worked out pretty nicely. However, after a while, I thought to myself, hey, I quite enjoyed this. Let's make this into a career. So here we are, many, many moons later. All right, so on this fine Monday morning, I always like to start with very large time frames. So I never start my analysis on tiny time frames because I feel that you can't see the forest for the trees, right? So I always like to start on a massive time frame. Markets are fractal, so they tend to kind of have the same behavior, and if you can find ways to find context on large time frames and then look for a similar context on low time frames, that generally puts you in a much better position because then you're trading with the larger time frame participants rather than trading with, those of us who don't have the power to move the markets, right? So you're May Dave down the road and, and you trading 1 micro on, your new Topstep XFA, that's not going to move the markets, right? So we need something else for context. Now, I have several levels, about 3 or 4, that I use to find orientation on the day. Now, when we look at copper, obviously it's just gone almost parabolic, right? So it's just going to shot up and it keeps making higher highs. There's the weekly chart on the full mini. And what can we take from this? Well, we've gone over the round number of 5. Okay, that was kind of a stopping point for quite a long time. And right now we're pushing even higher. Of course, this has to do with the macro picture. So we have tariffs, we have potential for copper tariffs to come in as well. And obviously all of that has impacted copper in a way that it's gone higher. Obviously, there's more uncertainty, more risk, and therefore here we are. Now, that's the weekly chart, okay? We're not going to be trading from the weekly chart, but we're just looking for context. So if I want to, for example, point out that there is a supply here, and we actually popped into this supply one time before, reacted from it, popped again, slight reaction, and now we're pushing higher. So obviously we had a couple of tests of that area, and on the third test we're starting to break down. Is that going to hold into the week? Nobody knows, and that is not the point here. All you need to understand from this kind of a time frame, such a massive time frame, is that we have a potential for some sort of resistance at some point that might bring a limited pullback because we are in an uptrend. On the daily chart, you will find a more zoomed in area. So here it is. So same thing, we're looking for context. So we have a supply, but we know this is in an uptrend. So now I need to look for some demand areas as well. So what do we have? Well, interestingly, we have something called the unclean arrival, which means we are creating a demand area right around here. Okay? This candle is not finished yet. So anything that happens today, if this sells off and doesn't create another demand, then it's not a demand. But for now, as it stands, it is visible. Now on a 4-hour chart, we have rally-based rally. So again, we can do a more zoomed in level. From here, that's the originating point. And then we have one move up, then a base, another move up, and it carries on. So where's the stopping point? Well, at least somewhere up here. if you look at my options activity levels on this microchart right next door, you will see that I have my average daily range exhaustion point at 520, where we also have a minor gamma exposure level, which is marked number 6. Now there is a stronger GEX level below it at 516, and there's a pretty strong area that represents a gamma wall and some calls at 513. So that will also remain of interest. And then to the downside, closer to the London value high, we have the ADR low, which is a complete exhaustion of the full 24-hour range to the downside at 508.90, so ballpark 509. What are we opening? Where are we opening in relation to the value area from Friday, London session? We're massively up. Now, does that automatically mean gap rules apply? Yes, but if it can't really do much, and if it tries to sell off and then it stops at one of these points, then I want to see if I can get in on that. We also have overnight VWAP just above this gamma wall. So I suppose if we maybe hit the ADR high, so here's the trade structuring side. So if we maybe hit ADR high, exhaust the move to the upside. This is statistical exhaustion, but they tend to work pretty well. And then maybe if we go into a sell-off, there is a chance that we go all the way down to 513, at least 514, where there's a GEX level there as well, but it's less relevant. So that's copper. So that is something that I've been trading quite a bit during London. And yeah, so let's move on to, what should we move on to? Maybe let's have a look at platinum as well, because I think that was an interesting one. No. And then we can always go back to copper. Right, platinum, same thing, weekly chart. It's also precious metal, but it's a little bit different than some of the ones that we've been trading. It's got a correlation, but it's not, it's not a super strong correlation. So just from this massive time frame, weekly chart, what do we have? A range. So, if you compare the copper chart, that clearly has a huge uptrend in place. So here's a weekly chart of copper. And here's a weekly chart of platinum. One is in a range, the other one is not. So right away, that gives me an idea of a trade location from like a very, very large time frame. So where would we want to be as buyers? Where would we want to be sellers here? Well, obviously, towards the edges of these ranges. Let me just get rid of some of the older levels from last week. And then we can replot them. So there's the weekly edge, weekly demand. Where is the nearest supply? It's up here. Of course, there's another one up here, but for now, this one has been reactive once, twice. We'll see what happens if it gets there for a third time. Now, in a range, you would expect this range to hold. So it's not like on copper, where if it's an uptrend, you expect the supplies to be broken, which is why you'll be looking for demand levels and then maybe looking for confluences intraday. But for now, we want to be looking at this range-bound market. So what does this tell me? Well, platinum is in the middle of nowhere from a weekly time frame, but that's not to say that we may not find some context as we start to drop down through the time frame. So one thing that I do see is that we have a multi-day POC from the volume profile printed right at these levels. That already had one reaction, and we also have another demand area here. But the point being is that we are keeping in mind that if this starts to drop like a stone, there is another level all the way down, that matches the weekly time frame. You have it in your head, right? You have to keep it in your head somewhere. All right, so looking at the 4-hour chart and what Asia has done, they've done very little on this particular product. So there's nothing to glean from that. But now let's have a look at the London areas. First things first, where are we opening? We opened below value and immediately accepted the value area. But the value area is pretty small, so let me plot that. So 982.7 for London value low. Let's make that purple and solid. There we go. Huh, is that right? That's not right. 982.7. What did I write? It's too early. 982.7, not 987.7. Typo. London value high, however, is 1987.7. That's where I got that from. Okay. So now, let me just have a quick glance at session ranges. So average session range London high is at 991. So that would be one of the things to look out for. So I would be looking for longs on platinum purely because we accepted the value area. Now, if we exit outside of the value and we don't actually get much traction, there is no initial balance extension eventually. Obviously, that will make me change my mind because that's market-generated information that we have to take in. But for now, I'm going to be looking for the market to show me the way. There is another thing, when this happens really early, there is a chance that they go all the way down to the initial balance low and then go into like a neutral day long. And that can sometimes bring some extensions on platinum because we have the main session that kicks in after a while. Okay, so let me just have a look at the options levels as well. Oh, interesting. So we don't actually have any strong options levels around here. We have one at 955, which is pretty far away. And then another one at 990, which might act as a magnet. But that 955 is very far away. So, you know, if we get that move down, never mind this supply, I wouldn't be surprised to see this all the way at 955. So it's like the outer edge of that weekly range that we were talking about. So very interesting. Okay, Candlestick Shenanigans, I like your name, says, hi Dee, just wondering, do you use correlation when you trade? For example, if you trade platinum, do you look at copper, gold, silver, trend too? So I wouldn't be looking at 100% correlation because they're not 100% correlated. This is already evident if you look at platinum versus copper. And also, if you look at gold versus copper, like, does this look correlated to? I mean, to me, copper and gold are, you know, sometimes correlated, but even they're not. Like, they have a general pull, but it's like right now, bullish on metals. What does that mean? Well, you know, some metals are more bullish than others, obviously. We have gold over 3K pretty firmly. Does that mean that I'm going to be super bullish on platinum when it's in a range? Not necessarily, but if we have, because remember, I have multiple screens and I always have multiple charts open. So I have not just metals, but I have all of the energies. I have all of the metals. I have all of the equities. So I can see correlations between them, but they're not very useful unless you kind of have a general idea of why macro should be bullish or bearish on that particular thing. Because on an intraday time frame, it's not that great, because if you see, let's say, gold starting to sell off, a lot of the times platinum and copper might have a muted reaction to that. It's like, oh yeah, we sort of tried, but we ran into our own options level and now we can't go further. And then they reverse and go completely the opposite way. So, be careful with correlations. Correlations are more useful if you're trading like longer term. And then you're like, right, let's put in some gold and copper and see which one performs better, right? But intraday, I always find correlations are a little bit tricky unless you have a clear risk on or risk off day. So what does that mean? Let's say we have some new war that comes out and everybody is like really scared and everybody starts to bail out of equities and into more safe haven assets. So that would mean equities down and then something like gold, copper, crude oil up, okay? That would be an example, very simple example of a risk off sentiment. Risk on sentiment is if we have good news, it's the opposite, right? So people will be buying equities back and then gold might be selling off. However, take that with a pinch of salt, because during COVID, that theory totally broke down. So we had gold and equities pretty much going in the same direction, and everyone was like, what's happening? And it's because we have some new asset classes. We have Bitcoin that is now perceived as some safe haven, even though I don't know how that would work. If you have an apocalypse, a true apocalypse, there's like a breakdown of the Western civilization as we know it, and suddenly we're all sort of like Mad Maxing it through the the abandoned cities that were once plentiful. So if you have no stock market, if you have nothing, how would you hold on to your Bitcoin? Gold is a physical asset, so it's like you can still trade it, but I don't know, it's just from that sort of cataclysmic side of things, if things really go horribly wrong, I just don't, I don't see the point. But yeah. Tooth Fairy Luke says, hey Dee, any thoughts of silver futures? I think silver futures are too big for these accounts. That is my first thought. It's kind of like Nikkei, right? If you get even a 150K account and you plow into something that costs $25 a tick, and it usually requires still about 30 ticks to actually allow you to stay in on the trade that you're trying to catch, I think that's too much risk. So that would be my first thought on silver. The reason why I don't talk much about it is because I think it's too expensive. So I like to focus on products that will be useful for people who are maybe just starting this journey or are struggling and they've tried to, do combines and evals and they keep failing. So the whole point of the London class, if you have to trade this part of the day, not that you have to, but let's say that you live in Australasia somewhere, or you're over on this side of the world and you just don't want to spend every evening trading the New York Stock Exchange and ES and NQ, these are some alternative markets that you can do. However, there are markets that are way too volatile, way too expensive, and can only be done once the market once you get a buffer or you get a bigger account, or, like I said, even micro on silver, it's not the 10th of the main contract. I think it's only, is it like a quarter or something? I don't know, but it's not that cheap and it's not conducive to scaling in, scaling out. You would have risk of ruin that is sky high, and that's why I don't like to really talk much about it. But, silver does correlate with gold, and I would actually argue that it's probably crazier than gold. When silver decides to do something, it just goes. It's like, wow. But, it does have times when it's extraordinarily quiet. So I would urge you to use the CME volatility indexes for that, just like I do for any alternative product, to make sure that we don't have the case of watching paint dry. So here it is. This is cheap and it is delayed. So, you don't have to pay for anything. But it is delayed by, I think, a couple of hours or something. However, with the volatility indexes, I don't really track them minute by minute. I don't look at VIX and go, ooh, what's it done now? Ooh, what's it done now? I just check it once a day and I'm like, okay, we're good. Or we're not good. So therefore, we're not trading that. Silver right now, volatility is up at 30, nearly at 31. So I would say that's a little crazy. Copper, I like to see over 20. That's firmly over 26. So that's day trading conditions. Platinum needs to be over, what is that number? I think it's also over 20. But I'm not sure. Let me just check. I have that in one of my prep templates. Okay. So platinum needs to be over 25. So see, now it says 23.6. Some change, positive change. So maybe that will rise up. So perhaps platinum is not the one to trade today. Gold, anytime it's over 14, for some reason it just goes absolutely insane. I like to trade gold when this particular volatility index is somewhere around 14, 13, and then it gets more tradable. 16, 17, and gold is like completely bonkers. So yeah, which is what's happening now. Similarly for WTI, I want to see this number at 35. That's crude oil. Natural gas has been moving pretty well. It's called the widowmaker in the industry, but if you don't carry it as a swing, and if you're not opening up positions that are like 15 lots of natural gas mini, and you're only trading it during the day, I actually find it pretty tame. It moves well. And today we have a core resistance that kind of stood the test of last week's trading. It was basically reactive for most of the week. And when I say reactive, it can be pivotal. So for example, it can be a resistance, but it can also be support if we overshot it. And that's at $4, so 4 evens. We also have HVL at 395. And we have put support at 385. So those would be kind of like some major options levels that we can fall back on. But let's go back to this silver thing and let's have a look at the silver chart as well, since we're talking. But yeah, platinum probably won't be trading it because, again, doing my pre-flight checklist, you guys reminded me to have a look at the C vol. And I can see that it's actually under my cutoff point where I like to trade it. What was I looking at? Silver. Okay, so let's have a look at micro silver. How does it relate, the weekly chart, to gold chart? So let's also do this. I mean, it's not that similar, is it? To me, silver is more bearish because we still have this supply that is reactive. Right? It's a reactive supply. It's at the top, but it's a reactive supply. So it's kind of, yeah. So there's nothing over here, no reference in gold apart from some options levels and my exhaustion areas. But silver, I think it's got a decent structure to it. One thing I'm not enjoying seeing, especially on a weekly chart, is these spikes. Like spiky. Why? Because those spikes tend to be very stabby on your P&L. Because when you try and run any sort of a swing, it's a little bit painful. Now, daily also has a lot of spikes. So look at that. Spiky, 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 spiky. And let's have a look at options. Actually, maybe we can find some levels there. But just be aware that I think that silver is way too big for these accounts. I can try to get the level for gold. I don't know why I didn't do that earlier. I mean, it is Monday, so I'm a little bit slower. All right, so let's have a look at gold. Let's assign this window. We're still in April, aren't we, for another few days? That's another thing. This week we're probably gonna have the rollover in gold. So that's gonna cause a bit of weirdness, as always. Anytime now. Here we go. Okay, so I now have interesting. So I now have some put strikes up at 340, which maybe implies that they expect that it's not going to go higher than that. And if it does, then a whole bunch of people will be in trouble on gold. But then there's still people who believe that this will reach 350. So there's some calls up at 350. It's just funny how that works out. On the downside, that big 3K level remains another area of interest for puts. And then, obviously some minor levels, GEX1 at 325, 3025, GEX3 at 310. But yeah, so interesting to see what happens with rollover, right? But yeah, silver I would stick away from, because even though I do trade it occasionally, it needs to have a pretty decent buffer behind it before I'm saying, yeah, trade silver, it's great. Your risk of ruin is in the millions of percent. Tooth Fairy Luke says, let's say that a gold C-vol is below 20, do you still trade it? Well, actually, for every single instrument, I will have a correlated number where I've traditionally done pretty well in that environment. And for gold, that number is not 20. That number is actually 14 and 13. So I would say the gold at 20, that's a pretty high volatility index for gold. Now, for something like copper, 20 is the cutoff point. So if it's below 20, don't want it. Don't want it. It's watching paint dry. You're trying to get a good trade going, and you just spent 3 hours either flipping and flopping trying to get some sort of a move, and it's just not happening. So I don't like that personally. If I'm going to do my D-style swing trades or any sort of trades really, I want to get at least 50 to 70 ticks out of it. If I'm aiming for more of a swing type trade intraday, I want more. I want 160 to 200, right? But, my intraday smaller trades, they still inherently have at least sort of like 1 R multiples inside them, which is traditionally on a lot of the products for me would be 35 ticks. But, but yeah, I have to watch the C-vol. And for copper, that's below 20. For gold, I actually want it to be above about 12, but not more than 15. Right now, we're like 20, so it's like, that's why we get candles at 183 ticks every so often in the span of like 30 minutes. And you're like, what are you doing, gold? Like, how am I supposed to limit risk on that? Settle down. And similarly, crude oil, on the other side, not being crazy, drying up, right? Going through menopause, as we've talked about. not too long ago. So basically, crude oil used to be a beautiful product. And when I went back to see what sort of sea vol we were working with back then, it was always 37, 39, up to 42. And then COVID went absolutely insane. But for the 13 years that I've been trading crude oil, I've very rarely seen it dip below 35 of its own volatility index. And then last year, come February, it just stopped moving completely. Like, I couldn't believe it was the same market. And I don't think it is the same market. This is the problem. Luckily, I found RBOB, which is kind of like a crude oil twin, but still maintains 400 to 500 ticks per day pretty regularly. So even if crude oil is not moving, you will get something out of RBOB, which is the gasoline futures. So, there's always an alternative. And, the prop community does help with that. Because, if you're struggling and you're like, oh my God, this is not moving, it used to be my main market, people can give you advice on what to trade. That's how I started trading DAX as well, because that's my main product for London, really. We don't have it yet on Topstep. But when I got into one of the London prop firms, I was like, well, we're in office really early compared to what we were in Chicago, because obviously in Chicago it's a different time zone and you're only really trading COMEX and NYMEX and New York Stock Exchange hours. So when I came back to London, I was like, well, what do you guys trade here? It's like things are dead. And the guy was like, what do you mean it's dead? You've got DAX, you've got Bund. And I'm like, well, DAX? Well, what's that? You mean DXY? And it's like, no, not the dollar index, you doofus. And I was like, then what is it? And he goes, it's the German index for 30. Then it was 30 German companies. And I'm like, oh, so that's like a German ES. And he's like, yeah, that's what we trade. And Bund. And then we had some people who were doing Bobble and Schatz as well, which are all very funnily named German bonds. So you used to have the Bund, Bobble and Schatz spread. So a lot of people were doing those kind of spreads. But that was like more kind of arbitrage trading back in the day when the computers were not that efficient. And now I think you can still kind of do them, but I don't know how effective that is anymore. So yeah. So with the volatility indexes, just make sure that, this is why data is so important, right? So I go back and look at my performance, and then I go, okay, when I found it easy, so when I was finding my setups and they were just going, what sort of volatility was that? Where were we? What number can we pin to that market state? And then I would put that in my journals and then reference it throughout the year, right? So now I have that as a benchmark and a pre-flight checklist sort of a thing before I'm even going to trade. So today I decided, let's have a look at platinum. And then you guys are talking to me and I'm like, oh, actually, let's have a look at what platinum is doing. So I looked at my pre-market prep and it says platinum over 25 ? Now that to me says that I do best on platinum when it's over 25 on the C-vol. We don't have that. It's at 23, so we wait until it's over 25, okay? We don't want to be stuck in watching paint dry sort of conditions. Let's just go back to copper because that's been my favorite thing to trade recently. It's been moving really nicely. It's been beautiful. So let's see how long that can keep going. But because this is just a little practice thingy. Actually, I like the larger time frame on the left, and then we're gonna have a low time frame on the right. Bring back those levels. Let's have a look at. Can we look at maybe natural gas or something? Just to give you an idea for later. Now, natural gas doesn't really move much during this time of the day. But I just want to give you an overview for later on, since we don't really cover, I don't think anybody covers natural gas. At least I've never heard many people talk about it. And I don't know why, because it's such a good market. Obviously not all the time, it is very seasonal. So sometimes it will be quiet, and then sometimes just whoosh, just starts moving. And again, that's down to the volatility index as well. However, it's very seasonal with natural gas, because naturally you have the times of the year when it's very cold. So a cold snap will kick up the demand for natural gas. Then we have a bit of a lull sort of from April, May. But typically when the warmer months start, a lot of the air conditioning units do use gas as well. So, you have to expect some kick up in demand during the summer months too, bizarrely. But yeah, let's have a look at what's going on technically. I know that it's looking very bullish on the, or it used to look very bullish on the weekly charts. However, now to me, this is looking more like a distribution, so some sort of a range consolidation. So maybe mark that off. So one line here. So bottom of the range. And all the way up here. Top of the range. But yeah, looks a bit range bound. We have a demand level right here at 393.7, just underneath 440 on the daily chart. What has overnight done? Nothing, because it doesn't usually move. It's one of those markets where Asia doesn't really do much with it. And London doesn't really do much with it either. I only notice my trades kind of working out really nicely in the overlap. So in basically about 90 minutes in the run up to NYMEX Open, that is when you get really nice moves. And then typically if I'm going to do anything with it after that, it's going to be after the initial balance is over. I do not like trading during the first hour. I think it's very messy across the board. Maybe not so much in copper. Like copper, I have taken trades through the initial balance with no ill effects. The swing kind of continues, but there's always a squiggle, right? There's always a little bit of a pullback retracement, either during the first part or the second part of the initial balance. So first 30 minutes or second 30 minutes of the actual exchange open. But yeah, it's natural gas is not like that, right? It's a bit crazy at the open and also very quiet. But let me give you some levels for later on. So natural gas, these are going to be NYMEX specific levels from Friday. 397 is the value low from NYMEX. Again, purple. You can see it's already kind of had a bit of a reaction there, which is interesting. 402 is the value high. Now the full 24-hour exhaustion is all the way up at 410. And then ADR low to the downside is 376. Okay, so let's mark those. So 410, already on the chart, is a former put level. So let's just reuse this line and go ADR high. Now this is the full 24-hour ADR high. It doesn't have anything to do with London, because again, London, not the main session, and it just doesn't really move well enough for me to get involved there. And what did I say? I said 376. Let's move that like this. So this is the kind of a process that I have, until I have a good understanding of what is happening. I'm not going to be quick clicking buttons for no reason. First of all, if we're far away from all levels, I've got nothing to do here because there's no edge there. Your edge should be based on how you are approaching each level and what sort of a probability that level has for you. So if you don't have that sort of a, a process or let's say progress tracking plan, you're just going to be forever in clicking buttons mode. So just, doing things that are not systematic, and then, sometimes they work, other times they don't, but you're not really sure why it worked. And, this way you're sort of honing in on why things are working. Now, this is a 50K combine that I started last week after finishing the 150K one. And in case you weren't here, I'll just get the results from that because I didn't manage to snap it up. I mean, I posted it on Twitter as well, but just to, say it was possible. This was the 150K one. Finished it. So that was barely 2.5 weeks. No rushing. Not trading more than 1 to 3 minis. And 3 minis only once I had some buffer. So we're starting this one again, like I said, to make sure you follow a good process. And compared to 1 to 3 minis over there, in 150K, I'm using 1 to 3 micros for 50K. Okay, nothing more. 1 to 3 minis. Sorry, micros. Why keep saying minis? So 50Ks micros, 150Ks minis. But again, if you're struggling with 150K and you're just constantly getting yourself into massive holes, that means the process is not good. So you have to go back to the drawing board, see what's not working, maybe work with a coach, and try to find the reasons why things are malfunctioning. And this is one of them. So this London class is all about showing you the process behind my levels. And you will see that it's always the same levels, right? I don't one time use, some random level that somebody gave me. I don't use, moving average one day, and then RSI signal another day, and then MACD divergence another time. It's always the same levels, right? Tooth Fairy like Luke says, do you copy trade? Sometimes I do, but obviously on Topstep I only have a live account. So for me, it does not serve any purpose. I can't get funded again. So I have a live account with Topstep, which I do trade when I have my highest edge, which unfortunately is not London on these products. Copper sometimes I do trade, but it sort of tends to miss the stream because I like to do my London trades on copper from my 11 a.m. That's still in almost 2 hours time. Usually if I'm trading anything during London, I will trade DAX, but we don't have it. Again, we don't have DAX on Topstep just yet. We are waiting. We're going to keep waiting, but until such time, I'm going to be very careful where I'm trading and what I'm trading this early in the day, because my edge on RBOB, natural gas, and ES is not until literally like post 3 p.m. my time, sometimes even post 4 p.m. as well. So that's like 9-10 a.m. Central, right? Much later than this. But for DAX, yeah, I do tend to trade DAX about 2 to 3 hours into London. Again, not super early because I want to understand what's going on. And this is why usually outside of the daylight savings clock change nonsense that we're going through now, I start the London session a little bit later. So I will start it typically 90 minutes into the London session. But right now, because we're running on Chicago time, because Topstep is an American company, and we decided to keep everything on Chicago time instead of like switching and changing it depending on whatever the Europe is doing, right? Europe. And we'll be changing our clocks back to 30th of March, whatever Sunday is. So 30th of March, our clocks are also going to be adjusted. And then we go back to my, 9:30 start GMT London session. And then we're going to have setups that sort of crop up towards the end of the stream. You will notice this as a pattern with me on copper and on platinum when I'm trading it. So nothing, be quiet. And then finally you get to the level that I'm looking at, or it breaks out of the initial balance with quite some strength, or something happens, like everything starts livening up. And that is when I effectively go pouncing on the trade setup, right? So, but copy trading, just be very careful with copy trading. Like I said, I do that sometimes. And the thing is, because of my YouTube channel, people keep asking me to review different companies. So I pretty much have, accounts all over the place because of that. I think at one point when I was like super busy and, I was really making videos, engaging videos. I was doing my own daily live streams. Everybody was asking me to review every single company that was coming up, like right after COVID. And I ended up with like 40 funded accounts. I was like, what the hell am I doing with 40 funded accounts with different companies? So I decided, because, some of them were like smaller accounts, some of them were bigger accounts. And then, I wanted to see how the firm is with payouts and stuff. So I'm like, okay, let me try that one. And then let me try this one. So at one point I had like so many accounts all over the place. And I'm like, this is just too much. I need to like kill this. And it got ridiculous. So I am only in favor of copy trading. And in fact, if you have not checked out my YouTube channel, that's actually one of the recent videos that I've done. I'm not super active over there. I'm kind of going through a bit of a saturation of my own idea of social media and stuff. I've been doing this for like a long time. But if I go to my channel and I share the video with you where I'm tackling this issue, right? Should you copy trade? So this is my channel. So you can find it underneath this video as well. So they usually put my links down there. So they put my YouTube and my Twitter there, X, whatever it's called now. So you can effectively just do YouTube, because I have a lot of content on YouTube. Like my Twitter is a bit random because I don't really I know that I have quite a lot of people following me there, but I sort of just look at it as like a fun thing where, I'm posting my dogs and, sometimes I post trades as well, but I'm not like super committed to it. So, I'm just a bit, I'm just a bit, bit non-committal on social media at the moment. So, that may change once I move, but yeah. And we've had some paperwork nightmares with the place that we're buying, so let's not even go there. And it's just this whole sort of especially last 2 years since I've been like struggling with a chronic illness and, just not really feeling like myself. It really affected my desire to get involved with social media to that point. This is great because I just sit here, I do my trading, and then that's pretty much it. I also enjoy when there's other people here. So, we had Coach Robert. We frequently have Coach Ray on Thursdays, but obviously Coach Robert was there last week. We're going to have a special guest this Wednesday as well. and I will be also on the main broadcast this week too. Let me clear my throat. All right, hopefully my throat is going to not have frogs in them. Rud, no, okay, I can't read your name, but it says, and waiting and waiting and waiting for DAX. Such a shame. It's the only thing that moves. For London, yeah, absolutely, I do agree. It's a shame. It's a shame that we don't have DAX. I know. Keep pestering them, guys. Keep asking them, because I think I've done everything that I can. You know, we've all upvoted that post, and that's pretty much it. So yeah. God, my throat is still playing up, so hold on. Maybe I can do the Red Bull. Do I get nervous when I'm placing trades? No, I do not get nervous. I will tell you when we first started TopstepTV, which was like whenever it was, August 2023. Jesus, has it already been like nearly 2 years? Christ. And in the beginning, they were trying to make everything a bit more kind of interesting, and there was some size pushing on our personal accounts. I did get nervous then because I felt that the size of the account was not conducive to that sort of size, and I'm a bit risk averse that way. So if I have 20 grand's worth of buffer, like a real buffer, not starting an account, I'm not going to be trading 3 lots on that, on the minis. And yet, we were sort of in the beginning encouraged to do that, and I did get nervous because when the trade wouldn't work out, and I'm like, oh God, now I'm like a grand in the hole. That's a lot. Like, what is happening here? So I tried to kind of go, can I just manage like this the way I think it should be managed? And they were like, oh, you need to make it more interesting. But they've stopped doing that, right? It was a very different environment back then where, we were trying something new and nobody has done anything like TopstepTV before, with a whole bunch of people and, banter and segments and different things. It was like CNBC, but for futures traders, and a lot less, a lot less like a wax museum and more like a real prop firm. And if you know what I mean, when you go into a prop firm, you don't typically wear suits. It's not a super corporate environment. Everybody's pretty relaxed. You can wear whatever the hell you want. And you have some very inappropriate conversations in there. Frequently, there's a bit of a frat boy culture going on. It's not like your standard or in-office environment. Everybody is big characters, we have big sort of stories, life stories behind us and whatever. So, yeah, we wanted to bring the spirit of the prop firm into YouTube, right? Into the online space, which is kind of what Topstep has been doing all along, right? They took the idea of funding traders that was only an in-office thing, and then eventually took that into the virtual prop space, right? So they were the pioneers, and now they've done the same thing with TopstepTV, where they've brought a piece of that sort of, trading, randomness, talking nonsense while we're waiting for setups. So somebody was... When I was on last week with the boys, there's a comment by somebody new. It's like, oh, are you guys going to yap or are you guys going to trade? So I responded in chat, we yap while we wait for a setup. Because that's what you do. Like, if you think that in the prop firm, everybody's just clicking buttons all day long. No, like many people are just like resting, right? Because there's nothing there. It's like you need to wait for levels. You need to be patient. That is the name of the game. The name of the game is not to sit down in the morning and start to click and then 10k down at like 10 a.m. in the morning, and you're like, oh shit, now I have to like spend the rest of the time dragging myself out of the drawdown. No, we wait for levels. We wait for the actual probabilities of the system that we're using around the levels that we're using. We don't just randomly chase. Let me move to micro here because all of my levels are plotted on there right now. Okay, so we have an extension of the initial balance in copper to the downside. It's just hitting the GEX level. So let's just chill, because I actually want to see it closer to VWAP and actually even close to this gamma line at 513 before I decide what they want to do with it. One problem here is that they never reached ADR high. So we never arrived at the final destination that this upside movement was showing me. The initial balance is very small. So there's a very good chance that we end up in a neutral day if this thing wags back up, but not before we maybe test all the way down. Now, since we just popped below it and we're about to have the new TPO in about 4 minutes, I would wait until that to happen so that I can see the composition of this candle and maybe have a little glance at bookmap, see whether buyers or sellers are stepping in, and then we can move on from there. I'm going to move away from this here as well. So I'm going to put the full copper on this side and on a lower time frame because I want to see exactly what's going on. I'm going to drag out the time and sales as well, which is kind of like a replacement for bookmap, where you can see the real-time orders coming in. And even though we don't have a heat map, it still helps. Especially if you've been staring at time and sales for well over a decade. Now, one thing that I do with time and sales, in case you guys only have level 2 on Topstep, is even if I'm trading micros, I still want to look at the full time and sales contract. So I'm not going to be looking at micros because really micro is a derivative of the full contract. So even though they're a little bit laggy, you know, sometimes you see the move in the mini, but it's kind of lagging in micro, and then it catches up. It still means that it's a derivative of a derivative. So, you know, I want to see what's actually happening. So now you can see there are some bigger boys here selling 11 contracts of copper. I mean, this is a pretty strong move, so we can try running a short trade on the basis that this GEX is breaking down. So stop loss at 35 ticks. And then my first area of interest to the downside. Now this might bounce from GEX, so you know, maybe I shouldn't be in with 3. So let's maybe, you know what? Let's do I scale out? Yeah, let's scale out 1. And then if it kind of starts to drag against me, I can effectively plow back in. And then if in a few minutes we don't have that massive drawdown back towards the initial balance, then I can maybe add if I'm allowed to. So if the market will give me an opportunity. But if this is a nice kind of flush down to the VWAP and gamma wall, I won't get an opportunity to do that. However, we should still be with maybe slightly smaller size. This is like effectively a late breakout to the downside trade back towards VWAP. It's a mean reversion trade, so it's more acceptable than kind of just going up and away. Every time I try to do trades that are opening with a gap, whether in relation to VWAP or value, and then I'm trying to go with the trend. In some of my products, that tends to be like really painful. Just doesn't really work the same way as it does in equities, right? But no, I don't get nervous entering trades when I'm managing them appropriately. In fact, I'm pretty confident in my setups. I don't care about losses either because, again, they are within my accuracy, statistical observations and probabilities. I'm not an overtrader. I don't have any issue with FOMO. I can easily let the entire day go and not be bothered whatsoever with that. Okay, so now it's dragging back towards GEX 2. And now I want to see whether there's any more sellers here. If yes, then we can add. If not, maybe I can add closer to the initial balance because that's my other orientation point. Typically, I like to add at my MAE number, which is 18. So when it drags against me by 18 ticks, I will add my final contract. But I never go over, like for example, I don't start on 3 and then I add 3 more, right? So right now, my default max position size for this particular experiment is 3. You can go below it, but you cannot go above it. So you can scale up to it, up to your max default size. And that's kind of how all of the prop firms that I worked in operated. You're given a max default size to manage however you want. Now on my live account, I mean, it's pretty generous, I've got to say. They've given me like 5 lots if I want, and I never really use that. Like, I really never use that. All right, so we have some selling. Okay, this is where I would do a partial stop. So I'm in with another contract back up to 3. However, I am going to put a partial stop out at sort of my MAE point because it's going to allow me to control the downside a little bit better. So we'll see whether this can actually flush down. But GEX2 for now is proving a little bit tough to break. But no, I don't get nervous. When you are managing yourself and when you've been learning for 18 years, like I know that I look younger, guys, but I am a lady in my 40s. I'm 44, will be 45 this year. And I've been at this for nearly two decades, right? So after a while, you just know the setups that work for you. And because I'm a systematic trader, I know what my setup should look like. I do maintain a long-term accuracy between 43 and 52%, even though in some weeks I can have outlier weeks when I'm smashing it at 70%, but that's not the realistic side of things. So you will see me lose trades. I lose 1 out of every 2 trades, and that's normal, but my risk reward is always positive. Very rarely will I do like a pure scalp where I don't have an edge that is over 1.3 R. My normal targets, I aim for at least 2. But if I see that I have a setup that is just kind of like going and going and going, I'm like, I'm going to let it go. And then I'm going to read the profile to see how far it gets to. Or maybe I have like a really aggressive sort of call gamma wall area that I'm shooting for. And it might get there. Like, for example, in platinum, when it's moving and when the volatility is higher, I would be thinking, oh, wow, 1050, there's like there's no way this is getting reached today. And then I kind of pop in a trade because somebody actually asked, how do I manage trades? Do I look at it? It depends on the trade, but in the long swing trades, obviously I'm not going to sit here for 6 hours kind of going, is it going my way? Is it going my way? Because what that's going to do is just going to make me overmanage things. So I will let it go, and then I will use 30-minute candlesticks to kind of guide my way, looking at the strength of the auction. Are we making headway? Are we making higher highs still or lower lows, whatever I'm doing with it? And after about 3 hours typically is what I aim for. Why? Because I have certain set points throughout the day where I don't like to get involved. Like, for example, up to the COMEX open for copper. Then if I have a trade running in copper, I will actually leave it. However, after the first half hour is done, I will decide whether I'm going to keep it. If I'm not keeping it, I cut the trade, then I look for another setup, but not until an hour later when we get closer to the euro close. Because at that point I have more statistical probabilities that tell me that my setups work out at that time much better, right? Now, copper is a little bit of an oddity because it does move quite a bit for London as well, usually in the latter parts of London, but it still moves, right? Both sessions are pretty juicy. But yeah, how do I manage trades? Let's say that I'm managing a end of day settlement trade of RBOB. I won't be walking away from those, I can tell you now, because those generally happen pretty quickly. Sometimes they won't even appear until 15 minutes before NYMEX settlement. And then it just goes either one way, so it either stops me out, or it just smashes my way. But sometimes those trades can only go to about 1 R multiples. So on RBOB for me, that would be about 85 ticks. Sometimes if I've managed to, really be super diligent on the entries, and the market allows me to snipe it from some sort of a low or a high that we had. You don't always get that opportunity, but sometimes you do. You get that liquidity grab. Our Bob loves doing those. And then I will kind of run my trades, and it will be over. But I will be there to watch it. I won't walk away from them. However, those are more scalp type trades where I'm not expecting them to last for an hour, 2 hours, 3 hours. I'm only expecting them to last maximum 30 minutes, maybe 2 minutes in some cases. So it really depends on the type of a setup I'm doing. I'm somebody who, like you can see a little chameleon in the background there, and my VIP group is called Chameleonaires. Why? Because I myself am a bit of a chameleon when it comes to trading. I can be a swing trader. I can turn into a range trader when necessary. I can turn into a trend trader. Mean reversions are my jam generally, but sometimes I'll be like, okay, there's no mean reversion setup. Now what? What, am I going to sit on my ass and do nothing? So over the years, I've worked on each part of my weakness in order to allow myself to learn how to behave and how to develop strategies for nearly every market environment. So as long as something is moving, I have no problems finding a setup. And I do that through a very careful analysis of several things. Exhaustion areas, options levels, value areas from the previous day, and time of day. You know, time of day has a big connotation in the way I do things. So, yeah. Arun wants to know when you are trading copper in your live, how many contracts do you use per account size? Again, very conservatively. So very conservatively, I will maybe use 1 micro per every 1,000 that I have. I mean, obviously, if the setup is really strong, like let's say we're in an uptrend and we get up to a value area high as a mean reversion trade, where we also have VWAP and we also have a gamma wall, I will actually be plowing into that with more size. So again, it's really dependent on your own probabilities. I don't know how that would help you, because that's my strength, right? That's my strength. And my strength is also that I can sit on trades until the cows come home if it's the right trade. Most people can't do that. Most people get afraid. You know, trade goes their way and they're like, oh my God, oh my God, oh my God, oh my God. But I've seen these trades happen a lot, and I have no fear. You know, I'm a little bit psychopathic that way. And I just don't really care. Like, if the one setup doesn't work out, I know that my higher risk reward is going to be fine as long as I don't go on a rampage of one trade after the next after the next. So this is why when you see me lose a trade, very rarely will I go back in immediately, because I want to see more information now. Like, for example, right now, we're getting back over GEX2. Whether that actually goes down or not, or whether it goes all the way back up to initial bounce, I don't know. That is an unknown. But, you know, me freaking out and suddenly starting to close this out, like it hasn't even got to like my normal MAE, right? And it's a small size. Even if you lose one, there's not going to be a huge dent in the P&L. It's just one trade. What I do after that is wait. I wait for more information, okay? So rather than asking me how do I manage my open trades, ask me how do I manage myself after the trade doesn't work out. That's the bigger question. You know, anybody can stare at a trade and either overmanage or not manage. I'm more in the camp of don't touch. So I find that people overmanage perfectly good trades. You know, I've seen, because I've been running a coaching service for 7 years now. I do have like one-to-ones through a very specific forum type thing. And, you know, people can also call me. You know, those are my gold members. They actually can just, you know, go, hey, Dee, can we set up a Zoom call? But generally we communicate through a forum type thing, because it keeps everybody separate, even though everybody can read each other's messages. I discourage too much mixing and matching because everyone is at a different point. But, you know, if you are struggling with overmanagement, that's a more common issue to have. So, for example, you know, someone who has been with me for about a couple of years, very good trader, sees the market pretty well, but struggles with some impulsivity, right? So they would go into a trade and for no rhyme or reason, just because it's moving. But now they can kind of recognize that. So even if they do it, they're like, okay, fine, I'll get out because that was just complete nonsense. But then they see a setup developing a bit later on. So what this particular trader is doing now is to use the impulsivity on the practice account. So basically they go into a practice account, do the first nonsense trades in there, and then as the session develops, they kind of get more into the groove. And what they also found is if they overmanage a perfectly good setup that we know is a good setup, that hurts them more than to just let the trade play out. Do or die approach, as I like to say. Boom or bust, right? Stop loss or 2R multiples. So managing trades is like, if it's a good setup, it should just play out, right? I also saw someone on Instagram saying things like, oh, high risk reward strategies, they're very difficult because they have low accuracy. Not all of them. And then they're talking about how, you lose day after day after day. If you have a good system, you're not supposed to lose day after day after day. You're supposed to maybe lose one in a day, then get the high R that same day. Then the next day, you do the same thing. So if mine is a high risk reward system, right? And does this look like I lose every day? And does this look like it's a high accuracy, low R system when I have nearly 52% accuracy, but also nearly 1.7 risk rewards on the profit factor? That's extremely high, okay? So that doesn't mean that every day, just because you have a high R strategy, that you're going to be losing every day. That's a misconception. If you keep it medium numbers ballpark, so not shooting for 5R and not shooting for 30% accuracy, you can actually get to, people are so obsessed with extremes of things. There is a nice middle ground. You can have trades every day that work out that are not, a bazillion R, but they are 1.5, 1.7, 2R, 2.3R, 3R. Okay, so we're working within a span of 1.3 up to 2.3R as a positive risk reward. And then you shoot for anywhere between 43 to 60% accuracy. And even if you stay on the lower side and 40%, that is still a profitable system. But when your numbers start climbing up above to 50%, then you're smashing it. And then you get this. You get, So don't really be swindled by people who are like, oh yeah, you need to have like high accuracy for intraday trading. No, you don't. This is a more stable way of doing things, but you have to do it the right way. You can't just shoot for the moon on a swing trade, okay, intraday. Because in most days, that's not going to happen. So you have to have some sort of a leeway where you're like, okay, I'm not going to shoot for 5R, but I might shoot for 1.5. So 1.5R. And I'm not going to touch it. I want non-polluted data from my nonsense. When I say my nonsense and non-polluted, no overmanaging trades, no adding to positions, no taking away from a position, no. Like, for example, I only partial a trade when it's gotten to 2R multiples and I'm shooting for 3R. And then I see that something's happening around 2R. And I'm like, I should probably take some off. That is a positively managed trade. Why? Because at 2R, if you take half off, now you have a zero risk trade without messing with anything. You're not messing with a stop loss. You're not messing with the stop loss placement. You're not messing with the risk reward of the trade. You already got 2R. So you take half off. If it starts to dip below 2R, you take it off. This is why a lot of the times in my actual stats, my trades end up being net 1.7R because I don't like what's going on around that 2.0 profit target, and I wanted more. However, I didn't get more. It started to dip below it. It's better to take all of it off the table. So that's the kind of management that I do, but at the same time, I'm very calm about it. I'm not freaking out. I'm not going, emotional, myriad of emotions as soon as I enter a trade. If that's you, if you're experiencing any sort of emotions, it just means you're still a newer trader. Even if you've been trading for years, it means that you still don't know what a good setup looks like for you. It means that you still don't have any idea of the strength of the setup that you're doing. Then maybe you're still oversizing and overtrading because of that lack of confidence. But once you start trading in the right way, journaling, away from all optimizations, so just do one micro, 2 setups a day, stop or target, stop or 2 or target. That's how you assess the quality of your trade locations, okay? You don't assess the quality of your trade locations by going into 40 trades a day. You size down, you slow down, and you see whether you can get an edge on 2 trades a day on 1 micro. Then we're talking. I would be far more impressed with people coming to me going, Dee, I've spent the last 3 months on 1 micro, my XFA is doing really well. Because your emotions are not there. You can actually unglue yourself from the emotional decisions when you're trading with less size. That is appropriate and for the account size that you have, for the buffer that you have in the account. Now, the buffer in the account when you start with a new combine, especially on a 50K, is $2,000. That is all you're working with. So think about it this way. If you were to plow in $2,000 into your own personal brokerage account, would you trade 5 minis in that? Like, you know, who the hell does that? Like, I just want to know who is so insane to trade that kind of, even 3 micros, even 3 minis is too much for this. I start with 1 mini in 150K and then slowly scale it up to 3 as the account is kind of growing. But it's like in a 50K, I get questions on YouTube that they're like, Dee, so you think that trading a 3 NQ on a 50K is too much? Yeah, what do you think? You think it isn't? That's a big problem, mate. Like, what the hell? So yeah, I don't know. Maybe I'm just like wired a different way. But yeah, not managing your trades and finding out the true edge that you actually have. Like, that is the whole goal. And if you're afraid of that process, what are you afraid of? Like, I don't, So this is the time where I would be moving one of my partial stops into profit, but I'm keeping my original one. That way it doesn't take me out of the market, but it minimizes my my downside somewhat. But this is more of a scalp. So right now I'm at VWAP, and I'm really aiming for this gamma wall to be reached, and it's only 51 ticks. So we're going to see what they want to do. And then if they whack it back up and take me out, that's fine. But at least I will be out with only 2, because this one is already in profit now. And if there's not much liquidity, then I might get slippage. But generally we should be all right. So now we watch. We watch for reactions around VWAP. Let's have a look at some of the other things. Oh, Paul H. Oh, you're back. Oh, thank God. Paul, we were so worried about you because none of us has seen you on the stream or anything. And we're like, what's going on with Paul H? Like, it's not like him. So I just hope, I really just hope that he's all right. So I can see that you are. That's a relief. So great to see you here. So the market stalkers, market stalker D, so my pre-market prep is actually just like a Word document. It's very, very high tech. I'll show you. So here it is. This is what I use. So here I have VIX areas. So PL, CL. So here I said no but close. DAX. HG, so all of my things, this is what it looks like. My hypos are down here. These are like drop down things, so I can very quickly come up with whatever I need to come up with. I have an overview of the weekly chart. Now, if you're new at this, and if you're new at the templates and stuff, it's probably going to take you forever to figure out exactly what you want to do with things. But like any other new skill, it gets better over time. But yeah, it's not a super, for the setups, I like to use flowcharts. So I will use something like Bubble US. And I just, on this account, I think I logged into the wrong account, but I do pay for it. However, for some reason, I forgot which account I was using. And this one, the other day when I was running my VIP thing, it kept saying that I need to upgrade. So I'm like, oh, suppose I'm on the free plan here. And I'm guessing I just got the wrong Google account. But for example, this would be a setup, right? So this is a different process. You have the general plan where you're like sort of tracking your progress and you're coming up with hypos and what should happen. Now, the top part of this is factual. That's not conjecture. It's actual things that we have on the chart. Hypos are more hypothetical. Hypos are hypos, right? Theoretical idea of what should happen in light of the probabilities that I've seen before. But at the same time, there are certain setups that are comprised in those. So I probably have about 7 or 8 setups that are core setups and then variations on them. And this would be how I would look at the setups. It's like, for example, RBOB, Euro close fade. Is the initial balance extended? If it is, you can carry on. If it isn't, no trade, wait for the next day trading time zone. If it is extended, I want to see that the distance to VWAP is over 0.4%. If that's a yes, then we can look for the evidence of people fading that into EU close. And especially if you have something like initial balance edge or gamma walls that are pretty strong. But if the distance of VWAP is less than 0.4%, you wait for the next day trading time zone, which is closer to settlement. So therefore, I walk away, go do something else, and come back when the time is right. That would be a setup. So my flow charts are for setups. They're not for my actual hypos. That would be too much. So my hypos are literally just textual things. So this is where I'm a systematic trader. And this is where I developed a lot of confidence in the setups that I kept seeing over and over and over and over and over and over. And in the end, I was like, okay, well, let's try and take advantage of that. Stats. It's stats, data science, and all of that. All right, we've been through that. Let's have a look at more questions. Jimmy T says, D, is London 1 hour initial balance and why 1 hour in current time compared to Pitts back then? Even Pitts back then was still 1 hour. Still the same, Jimmy. You're probably confusing it with the opening range, which was different. So the opening range in the Pitts was basically one guy going, hey, what do you think the opening range would be? Hey, what do you reckon you wanted the opening range? And then they would kind of come up with something that was the opening range. The initial balance was always the 1 hour, right? So, but the opening range, again, that was slightly different. Hopefully that answers that question. Matt Hughes says, do I look for aggressive selling and buying against the bid or ask with stocks? I don't trade stocks, I trade indices, and the closest that I get to the indices is DAX and sometimes ES, but I'm not a stock trader. I'm a commodities trader, which is a little bit different. But do I look for the aggressive selling and buying to step in? Sometimes. It depends on the setup. If I'm looking for a mean reversion trade, yes, you will need some aggressive players to step in and to actually drive the price with some volume behind it. But if I'm looking at a more range-bound market, then it's quite the opposite. I will be looking for any breaks of that failure to not have any power behind them and to fizzle out. And then I fade that. But, it's like, it's, again, down to the setup. So it really, really depends. Stocks have this penchant that it keeps going on any direction, that they pick. And that's usually because most stocks would be relatively quiet until the earnings season, if we're not talking like, the top companies. If you're trading just individual stocks that are not super strong, there's likely not going to be that much happening. But when something does happen, they just kind of go directionally, either parabolic, or they just sell off like crazy. So it's a different approach, different market, different asset class, if you will. Moosty42 says, how do you stick to your rules every day? Do you write them on a piece of paper, read them every morning? I've been disciplined for 3 weeks, and last Friday blew a 50K account after a payout. Okay, so let's talk. So we're going to have Jerome D here on Wednesday, and we're actually going to tackle some serious stuff when it comes to neuroscience. But let's just say that there's this misconception that if you start doing something every day, within the next 20 days, you will suddenly have all of these new neural connections, and that will be a new habit that you can fall back on. That's not true. In order for you to develop one new habit, you have to keep doing it every day for a minimum of 264 days. That's for most people. But there will be some people that need even more time than that. So you sticking to your rules for 3 weeks is the beginning. But it's not going to do anything for the habit creation that we need. So that happens a year later when you've been doing something every single day. Okay? So that's probably the issue here. All right, this is bouncing from VWAP. I'm going to take this and reassess. I want to see what happens at GEX2, because they should have gone to gamma, and they didn't. So VWAP is right now being a problem area, and I can't ignore that. So that is a reason for me to close the trade early. I was expecting weakness through VWAP. It hasn't happened. Might give me a chance later on, but now I want it a little bit higher in relation to this new supply that we have from here. So right now, I actually want to see this come back all the way up here. I need to get that zoom it thing where you can do things on the screen. So I want my trade to now come back somewhere closer to here. So trade location now becomes different now that this mean reversion trade only made it to VWAP and not all the way past it and down below it. So now I'm going to demand that we go back to a swing extreme. And maybe if we don't stop there, then we go up here. So my next trade location is going to be ADR high, maybe much later. Okay, so that's an early exit based on what the market is doing around VWAP. The dangerous area. Somebody asked me where I'm from. I am originally from Serbia. I'm a mix of Italian, Greek, and Serbia. And then I moved to London in sort of the early 2000s. And I've been living here ever since. So I am a naturalized British citizen with Mediterranean roots, if you will. So yeah. So how do you stick to your plan? You stick to your plan until your neural networks are completely in tune with whatever you need to be doing. So 3 weeks is not long enough. So I would write out, this is a book called The 12-Week Year. I would highly suggest that you get it. And it talks about how, let's say that we know that the habit creation takes a year, doing something every day. But that's not to say that you can't do goals every 3 weeks, every 6 weeks, every 12 weeks. So in your case, because your discipline broke down 3 weeks later, that's your cutoff point. That means that your mental capital was exhausted at that point. Whenever you're trying to follow rules, it's almost like it's a game of how long can I last before I totally mess it up. And I feel like a lot of people have that approach to discipline. So instead of doing that, when I was training myself to follow rules, this was like many years ago, But, I had to go through the same process, right? I wanted to make every part of my process into a habit, whether that's not moving a stop, whether that's not sizing up like a lunatic, which I never really did. I was always like using maximum 1% of the entire capital. I was like so conservative. But I still had a blow up moment 2 years later. I actually spoke about it with Mick on Thursday. I think it was Thursday. So we were on together for lunchbox trading, and he came over to talk about one of the traders. And I spoke about my own malfunction where I built up an account from like a very small amount of 2K up to 70K over a 2-year period. 2 years. And then just got biased on a trade and ruined it in 5 days flat. Literally blew up the entire account. So, that I can laugh about it now because it's like, haha, Dee was a muppet. But back then it was like, it kind of felt like I went through a second death or something. I felt like all of the years of 2 years work and beautiful trades that were just totally magical and amazing and had high risk reward and, everything that you want out of trading. I kind of just blew up everything from just in 5 days time. I just kind of opened up the window and went all the 70K down the window. Literally the same thing. And I felt grief, I felt disappointment in myself, and I wanted to ensure that never happened again. So what I did is to go on this huge sort of neuroscience exploration of why it happened to me, what happened, how can I prevent it on a biological level, and I learned a lot, right? So what I did since then is to make every piece of what I'm doing into a systematic thing. So I would do, and I actually do this for my private coaching as well. I do the Bart Simpsoning. So you want to remember something really well, or you want to stop doing stupid shit. You write things down, like Bart Simpson does, like 50 times per day, and not just once when you F it up that day. No, you have to keep doing it for full 7 days, even if it's the weekend. And then after that, you get negative reinforcement. So you're going to be thinking twice whether you're going to be doing that next time, because you're going to be writing things out that's a little bit uncomfortable, but just enough for your brain to kind of go, there's a consequence to this. I don't like it. So I'm going to stop doing that. But at the same time, I also knew about the time span of over a year to develop something. So I had these like goals. I used to track myself at which point does my discipline slip. That is the point where I need to give more attention to and then work to get over the hump. It's kind of like reaching a plateau in fitness, right? So you're exercising, you're getting buffer, skinnier, whatever, stronger. And then you get to a point where nothing's changed for like 3 months and you're like, dude, what gives? Like, I've been going to the gym 6 times a week. I've been exercising like 3 hours a day. Like, why am I just not breaking through this plateau? I want to grow more. I want to be more fit, more toned, whatever you want. And it's the same thing with your mental capital. You get to a point where it's just plateaued and it won't get past that level. So you need to do tricks to get your brain to get past the plateau. So for example, for you, Musti, it would be 3 weeks and your discipline slips. How do I get past it? Well, let me see if I get... Okay, next time, starting again, following all the rules. And again, are you following too many rules? That's also a thing. I used to have 1 week, I would assign a certain task. Then at the end of the week, I would see how I did. Let's say, only use the same position size. So 1 week later, did I follow the rule of same position size throughout the week? Yes, I can stick to it, carry on. I can add another thing to it. If I didn't, and if I had one day where I was like, yeah, I'm just going to try a little bit bigger, I would effectively punish myself to do the same thing. So stick with the same position size, no changes, until I don't make a change. So until I stick to the rule, I cannot move forward. Okay. And for you, 3 weeks later, you blew up. That means next 3 weeks, once you get to that third week, something happens to you mentally. I don't know what. Nobody knows. Everybody's different. But something happens to you where your mental capital is exhausted and your brain just goes, F it. I'm going to just YOLO it today. But you do need to figure out whether it was the market event, whether it was maybe OPEX, because it was, it was option expiries. Because that can bring really odd days with massive movement, where the market is being irrational. But you're not, as a trader, you're not supposed to be getting involved in that bullshit, right? You're supposed to be going, market is being irrational, I'm not risking my money in this nonsense, so I'm walking away. So you need to figure out what it was that triggered you, and that will be your mental trigger. Nobody can do that for you because everybody's got different mental triggers. For me, it's quieter markets when nothing is moving and I'm in a trade for 3 hours and it's not moved past 5 ticks. That irks me. I can't stay in trade. This is why I don't trade bonds. Even though Coach Robert told me last Thursday, oh, look at bonds. I still found them slow, like they were moving. But every time I looked at them, I was like, still nothing. It's like, really? So I need to have a certain number of ticks to be happy. So this is what I figured out about myself. So if a product is moving, but it's only moving 40 ticks a day, Dee is not going to be happy with that. Dee needs 180 to 200 ticks so that she can get 70 to 100 ticks and be, reasonably chirpy about the trade that she's running. For me, anything less than about 50 ticks profit is like a waste of time. So that's something that I've come across in my head. I don't know why I'm like that, but I just am. I need a certain amount of tickage to tell my brain that this trade is worth it. It's just how it is, right? So instead of trying to change that, I'm actually saying to myself, okay, let's just pick the markets that have that. And, it's been a game changer for me from that point onward. But you need to find your own little, gremlins, trading gremlins, and try not to feed them after midnight. And, don't get them wet. Gen XD coming out now. GDL says, Dee, where do you get your GEX and options levels? From a company called Mentor Q. So like mentor, but with an H in there. So Mentor Q. They are a subscription service, obviously. So I'm not an affiliate. I did, me and Anne-Marie did one webinar with the boys. So we know them, but we're not affiliates or anything like that. So it's just a great company that makes sure that we have all these levels without having to stare at horribly complicated matrices and stuff. Toothfairy Luke says, how do you treat yourself after you have a good trading month, quarter, year? Do you know what? I stopped treating myself. I'm not a dog. But I've got to say, back when I was a new trader, I used to treat myself with new shoes. So when I was actively working on my skills, and I think this is where that part is more important. If you're actively working on your skills to not break your rules, you need to give yourself some sort of positive reinforcement. So, for example, let's do my example of moving stop losses that caused me to lose the account, and then me working for the next year to never move my stops. Now, these days, like for example on Ninja Trader, we do have this thing called Guardian Angel Trader, which has like an extra tick where it doesn't allow you to move your stops, and you can do the same for targets, but I don't have a problem with targets. And you can set that, and then it won't move, like it won't let you move the stops. You can try all you want, but the stop is just set in stone. I still have that as my setting on that platform. Because I don't want to be in a position, you can move it closer, but you just can't move it further away. So knowing that, so many years ago that scarred me, I wanted to make sure that I never think about it. And then what I did is just to have that as a hard rule. And I don't even, there's not even a question in my mind of whether I should be moving the stop loss. It's just not an option. But when I was working on that, I would spend 2 weeks doing my rules every day and then going through the journal, going, did I follow the rules? Yes. Did I follow the rule? Yes. Did I follow the rule? Yes. Did I follow the... After 2 weeks, I would allow myself to buy a new pair of shoes. So I have a whole cupboard of shoes that I bought. And, these days I don't go out much. And back then I was still doing music, still a musician. So you could kind of argue, okay, you've got gigs, so you need shoes, right? But these days I could go dog walking, and, every so often I go into a like brunch-like situation, usually with dogs. So yeah, a little bit different. So since then, since I sorted out my own gremlins, I don't feel the need to reward myself because I feel like it's not doing much. I'm not working on anything new. I'm still following, the rules, following setups, not overtrading, not moving stops. If I move stops, there's a very good reason for it, or I will move it like partially. But it's not like, oh, Dee has a problem with something, so therefore we need to do the Bart Simpsoning if we've done the wrong thing for 7 days. And then after 2 weeks, we can revisit to see if I followed the rules, and then I can reward myself with a biscuit. I don't do that anymore, but it's a useful technique. If it helps you, it is a negative reinforcement versus positive reinforcement. And, I say I'm not a dog, but we are both mammals, right? Dogs are mammals. We're mammals too. So what happens is that we have the same negative versus positive reinforcement system. Same. Like, I know with my dogs, there's definitely like a lot of free will happening, but for some things, they have this like operant conditioning that I taught them from when they were puppies. For example, I have one of my big boys, Rimmer. Whenever I get a biscuit, he immediately runs into his crate. Like, he just doesn't even think. He just does it, right? Just biscuits, crate, biscuits, crate, biscuits, crate. Even when I'm not trying to put him in the crate, I'm just like, dude, just have some biscuits, mate. Like, you've done well, or you're being cute or something. No, in his head, biscuits mean crate. Like, there's no, and you can see that it's operant conditioning. It has nothing to do with, oh, what am I, do I have a choice here? So you want to get to a point as a trader that you have the same thing. It's like, you see, 15-minute bearish engulfing at value high. What do? Oh, value acceptance trade to the downside. Cool. Or, consolidation at the gamma wall. What do? We do a 35 tick stop, we do 2 hour multiples, and we leave it alone. Things like that, right? That becomes like a habit to you, right? So until you get to that point, you can absolutely use the negative reinforcement and positive reinforcement as well. Vid Blanco says, what do you think of EuroFX 6E delta reliability of the CME exchange, considering most of it is traded OTC? Yeah, that's the problem with Forex. I don't like Forex. I've traded it for the first 5 years. Then we went through austerity measures, and it still suffers the problem of not having too many pips or ticks inside it in a day. So it's one of my triggers when I don't have enough ticks on Euro. So I don't really look at it. I don't think the delta is that reliable there because it's such a small portion of the market. The Forex market is traded in resorts, airports, different banks. It's not a centralized exchange, but a portion of it is centralized through the CME. That means that the delta or any sort of volume-based stuff that you're seeing is obviously not going to be as reliable as some of the instruments that are only traded through the futures exchanges, okay? But I moved away from Forex in 2012, and I think the last trade that I did was GBP New Zealand dollar somewhere in 2018 maybe. But yeah, I haven't, I don't like Forex products. It's just not my thing. I'm a commodities girl, right? Commodities chick. You want anything copper, gold, RBOB, crude oil, natural gas, platinum, I'm here, okay? Anything else, just ask somebody else. Yeah, what is the crime, says Pavlov's dog. That's exactly it. Yeah, the drooling puppies. That's it. Am I a vocalist? Yes, one of my things I did. I was a singer, but I was more interested in being an instrumentalist, so I was an alto sax and electric guitar player for many years, like 20 years, but yeah. Did I miss any questions? No, I think we're getting up to speed. And then we're going to finish it up because I've got to go and get the house ready. How much time is permitted to pass eval? There's no time limit, but you will get charged monthly. So if you take 3 months, they don't care. If you take a year, doesn't care, but there will be a monthly charge, okay? Anyways, guys, let's finish it up. I think we are... I think we had a good session here, right? We found a partial trade. I mean, it sort of partially worked. But yeah, I'm going to go and chill out for a little while. Do check out our Discord where we have a whole bunch of classes running every single day. This is where all of us are running our VIP coaching too. And yeah, let's see what happens tomorrow and what happens this week. Like I said, we do have some metals that will be probably rolling over at some point into the end of this week. And if you are looking to come and hang with us, check out this casting call form. So, you know, Paul H. filled it up, and it brought us to quite a few sessions with Paul H, and now all of you know him. We know him. We're friends. We're always asking where he is, getting worried. All of it started with the casting calls, so fill it up. All right. Anyways, I am gonna run. So thank you all for being here. Click like, click subscribe. I will see you all again for another London class tomorrow. Again, very early, 8:30 a.m. my time, but still 3:30 a.m. Central. Yeah, so that's it. I'm Mark Dee, and this has been the London session on TopstepTV. I will see you later. Take care.